This is the Electile Dysfunction Podcast with Ashton Cohen.
Ladies and gentlemen, welcome back to the Electile Dysfunction Podcast. Ashton Cohen. I am your host, Ashton Cohen. I'm here today with Jimmy Song, Bitcoin developer and entrepreneur. He is someone whose work and analysis I've followed for quite some time. And I think he's one of the most informative and bright people in the space. So his most recent book is Thank God for Bitcoin, which I particularly enjoyed. It was you co-authored it with 7 other people, is that right? Yeah,
that's correct.
It's a fascinating piece because it really focuses on the moral case for Bitcoin, which is, I think, going to be a theme of this podcast. I like that realm of analysis. First, Jimmy, I'd like to start with what attracted you to Bitcoin. What is it in Jimmy Song's background that made him see the potential for this from a fairly early stage in its development relative to the professional financial advisors and Ivy League MBAs? What was it in your background experience that made you understand this when they missed the boat?
Yeah. So first of all, I've been a programmer since I was like 9 years old, right? Like I got my first computer back then, and I've been programming ever since, all through high school, middle school, high school, a little bit in college, and then certainly professionally right after college. That's been my world. So I was well positioned as a programmer, like understanding technology and public key cryptography and things like that, to kind of get it. And the other thing that I would say is 2008. I think that that opened my eyes quite a bit in regards to, what the actual financial system was like. I still remember, I lived in Boston for a while, and when I first moved there, there was this big project in Boston called the Big Dig. I don't know if you know about that.
No,
it was extending. I think it was Highway 95 and Highway 90 or something like that, and they had to dig this huge tunnel to go under the city so that it would be done. And at the time, when it was originally made, the funds for the project, it was like what I thought back then was an astronomical number. It was going to cost $2 billion, and I was like,
Trump changed day.
Yeah. I mean, and I was like, oh, this is so crazy! I can't believe that. But there were cost overruns, and the project ended up costing closer to $20 billion. And one of the things was, hey, it's not our money, it's the federal government that's like paying for it or whatever. Right. And I remember thinking, okay, like that is an insane amount of money, right? Like, especially back then, like $20 billion, like what the hell are you using all of that money for? And that was kind of what I was thinking. Then 2008 comes along, and all those numbers look quaint in comparison, right? Because like they start talking about bailouts, and like they're throwing numbers like $800 billion TARP bailout. And I'm like, okay, something is wrong here, right? Because how can you spend that much money, right? Like that's an insane amount of money. Why do you need that much money in order to quote unquote provide liquidity to the system or whatever? So I started learning about what was going on and like actually looking into it. And it's like, okay, where's the money coming from? And it's like a famous quote by like Bernanke, like, it's like, aren't taxpayers paying for this? He's like, no, actually we're going to, issue the liquidity out of the Federal Reserve. And like, I found out later, yeah, it is actually taxing. It's just in a way that it's not obvious. So I was well positioned, I think, from the disillusionment of 2008 and being a programmer, such that when I first encountered it in 2011, it really struck me as something that could work, because I was like, okay, it's software based, so you can always check stuff. And the other thing was there was a hard 21 million cap, and almost immediately after I heard that, it's like, okay, this could be good money then. And that's how I sort of like entered the space, is reading about it and knowing, okay, wow, there's a 21 million limit. This gonna kind of get crazy. And if it catches on at all, I did the math. I'm like, okay, this could be potentially worth millions of dollars per Bitcoin at current prices. So I was like, okay. So I did get into it from a sort of like a programming and economics perspective. And I think a lot of the people that did get in relatively early tend to have that kind of background rather than the MBA fintech people.
And what was your level of conviction, say, at that time in that 2011 area? Were you confident enough to say, okay, I'm going to put the majority of my fiat in this, or did you sort of dip your toe in and say, I think this is a very promising technology. I'm not sure how it's going to work relative to the potential government regulations coming along, or all sorts of maybe unseen risks. This is the first thing of its kind, really, this digital scarcity concept. What was how did your conviction sort of build from that, from 2011 onward? Was it automatic? Was it sort of like in 2011 you sort of got your full conviction in it, or did it take a few years?
Well, it took a few years. So at the beginning, it was just sort of like, okay, I found out about the 21 million limit, and I was like, okay, well, I think I should at least get a little bit. And it took me a while to actually get that little bit. It was really annoying at the time to actually go get Bitcoin. The main exchange was a place called Mt. Gox, and it was based in Japan, so you couldn't transfer money directly. There was no way to like put your credit card info in or somewhere or anything like that. What you had to do was use a money transmission service called Dwala, and they required some sort of AML KYC stuff. So everything took forever. And so like one of my biggest regrets is not buying Bitcoin when I first heard about it, because of the annoyances of all of the money transmission that was required to get it onto the exchange before I could buy it. But I did eventually buy a little bit, and that little bit has turned into a lot, because you didn't need to buy very much in order for it to sort of take over your portfolio. But no, I wasn't like fully convicted at the beginning. In fact, there are very few people that actually do sort of go all in at the beginning. I think Rick Falvin, he's the Pirate Party guy. He's one of the few people I know that actually did that, and I think he went all in at like $3, where he was just like, this is it. I'm just going to put all my money into Bitcoin. And that I'm sure he's doing very well as a result, though he did like sort of flirt with Bitcoin Cash and stuff like that. But ultimately, what really sort of like drove everything was the 2013, like what happened then. At the time, like the big narrative around Bitcoin was it's like money for drugs and darknet and stuff like that. And like I was excited during the first bull run, and I bought some more and stuff like that. But really, like starting in October after the arrest of Ross Ulbricht, I think for me it was like, okay, why is this still going up?
The Silk Road guy.
Yeah. And like after he was, why is this going up? Like that site is down, it's seized by the FBI. Why is it going up? And I realized like there was a different aspect to it, other than drug money. And that for me was like a moment of, okay, well, I really need to like be more involved in this. So I started contributing to an open source project based on Bitcoin and stuff. And I got paid in Bitcoin. And I was forced essentially as part of that open source contribution and being paid for it to learn a lot of the Bitcoin internals. And in learning a lot of those internals, I learned a lot about like the actual cryptography involved and things like that. So that brought my conviction up another level. And by 2014, it was just like, okay, what pension funds do we have? What 401k? Like we're liquidating it all. We're putting it into Bitcoin, and that was. I had conviction by 2014, but it took a few years of really learning about it and understanding what it was all about.
And that seems like a familiar theme. I came into the space, a few years later than you did, after my law school. And it seems like most people, and I sort of came into it as, okay, well, this is a sort of, cutesy, interesting idea, being able to transact this money. And from the economic perspective, it sounded interesting. And then sort of being what really sort of did it for me in terms of my, and I'm curious to see how you transition to the moral, thinking of it from a social good perspective, a morality perspective, a liberation perspective, was when I read Saifedean's book, The Bitcoin Standard. And especially growing up, I grew up, I was born in the 90s. And then so 2008 happens in my sort of formative years, and my family's in real estate. And that was just a disaster. And then obviously with all the calamities that resulted from that, and going forward with the massive amounts of government spending that happened, and now we're here with coronavirus. And you see that authoritarian directives that seemed unimaginable in the West 2 years ago are now being implemented. Like Australia is now, and New Zealand closing like the entire country for like one COVID case, and arresting people for not wearing masks. And then you juxtapose that with 53% of the world pre-COVID was living under authoritarianism, and coming from an international family, who escaped authoritarian regimes, it all started to make sense. How did you make the connection in terms of looking at from actually this is a good place to put my money to actually this is the escape from so many of our problems. This is in defiance towards government overreach, authoritarianism, control over people's lives, economic impoverishment. When did you sort of connect those dots?
Yeah, that came, I think, for me a little bit later. So 2014, 15, 16, 17, you started to see some rumblings in different places. So China started to ban Bitcoin. They banned Bitcoin like a billion times, or they just kept kind of doing it. And there were sort of like things like the Cyprus bailout and things like that, which happened in well, I think it was like a haircut or something to that effect, where they just took like 10% of the depositors' money out of the banks of Cyprus. I think this was in 2013. So those kinds of stories were kind of like fuel for Bitcoin's fire, because it was like, wait, you can just take depositors' money like that. And nowadays, there's a lot more money printing going on, so they don't have to do that. And make it less obvious that they are doing stuff like that. But that was those I think were for me like the big ones. And then I studied history a little bit more, and I found out about Executive Order 6102, and this was just insane. All right, like this was in 1933, shortly after FDR comes into office. He just issues an executive order saying, okay, no one is allowed to own gold. And it's crazy that the American public went along with it, because like constitutionally he doesn't have,
and no one talks about it. I never learned that in school.
It's just he just seized all the gold. And the ostensible reason he did that was because at the time you can trade in $20.67 for 1 ounce of gold. And what he did with an act of Congress a year later was he revalued it to $35. So he expanded the money supply by like 50% in like a single stroke by saying, okay, it's now this, and he could fuel all of this New Deal spending and later like World War II and stuff like that. But that like to me was just kind of like, okay, what? Like how is this allowed to happen? And then later, you had different things like in India where they banned like 500 and 1,000 rupee notes, just ostensibly to kind of get rid of cash. And then we started hearing rumblings about central bank digital currencies. And in my analysis, I was like, wow, this is going to be an authoritarian's wet dream. This is like Hitler or Stalin would have never dreamed of having something with this much control. And this is coming down the pike. So for me, like the cause of liberty and wanting to seeing Bitcoin as sort of like an antidote to that started to come for me like in 2015, 16, 17. And I mean, it definitely like, that became sort of like a rallying cry for a lot of the community. And there are a lot of libertarians in the Bitcoin space. So reading through a lot of like Austrian economics and stuff, these things become extremely clear.
Sure, absolutely. I want to mention on the FDR thing, because I'm an attorney. I always had an interest in constitutional law, and that sort of came late in my education. I don't even I didn't even learn that in law school. It came after law school, and I'm thinking like they actually went to people's homes and dug up gold who they suspected of burying gold. And on top of that, that executive order also not only did it make possession of gold illegal, but it made the contracts in which you would basically have, pay me $100 or the gold equivalent. The gold equivalent part got null and void on contracts. And it's like, how did that even happen in the United States of America with such strong constitutional protections and property rights, among the strongest in the world?
And pretty much unilaterally, right? It was an executive order, no congressional anything for even judges saying anything. It was just sort of, okay, I guess this is what we're gonna do. It was crazy.
Right. It's unbelievable. And then and I think because, and you were born somewhere. You're an immigrant, is that right?
Yeah.
Where are you from?
South Korea.
South Korea. Okay. So, you know, my whole family are immigrants, and I think one of the things that Americans sort of tend to not appreciate or forget is just how bad the world can be and how shit can go south, really, because America has been isolated from so much of the world's misery in its, you know, couple hundred years existence, particularly in the 20th century, with the exception of the Great Depression. But even that, it was significantly worse in other places, like obviously Weimar Republic and things of that nature. So we almost feel like that kind of stuff can't happen here. And I think if there's the silver lining of COVID, it was that, oh no, they can use something to justify imposing rights and restrictions upon you, taking away your liberties that you never even thought was possible in this country. And within the blink of an eye, I mean, how much has the country changed in 2 years? I mean, could you even imagine 2 years ago, you know, people saying that you can't go to church, but then you can ride outside, and you know, I mean, all these insane laws, and you know, liquor stores and weed stores are able to be open, but then small businesses can't and churches can't, and it's just like, that's not something I thought was even sort of remotely possible in such a short period of time. And so I think that does, at least, I think a lot of Americans have probably changed their tune into thinking that, okay, maybe we're not actually isolated from all the world's calamitous consequences. And so today, it's 46 million Americans, I read, have Bitcoin. But I was listening to Preston Fish. He had a individual show, Chrysius or something, and he was basically saying that's a little bit high, because he estimates probably, if you measure it by people who have 1/10 of a Bitcoin, which would be like a sort of sizable amount, you have stake in the game in a sense. He estimates maybe about 10 million. What do you think the Bitcoin adoption curve is right now, and what do you project it to be, let's say, by the end of next cycle? So within maybe like 5 years or so.
Yeah, that's a tough question. I think 10 million sounds about right to me. And you know, that's about 1 out of every 30 people in the US like owning Bitcoin. I'm sure way more than that have heard about it, but it does still feel like, you know, say circa 95, 96 internet, right? Like a lot of people had heard about it, but not that many people are on. Maybe you had a friend that was on AOL or something like that. Kind of like, you know, maybe you have a friend that has an account at Coinbase, something to that effect. So there is some level of adoption, but you know, the big factor in adoption is how quickly kind of things are going south. So things do seem to be going south, and the federal government is spending money like a drunken sailor at the moment, and just continually expanding this recent infrastructure bill, and like, you know, all these like payments out to people and things like that. It's getting to be an enormous amount of money. So that the balance sheet's going to continue to increase, and if there's more money, then you know, it has to go somewhere. Stocks are at all-time high levels. Real estate is insane and impossible to get right now, and like bids are coming in at like 30% above asking oftentimes and stuff. Yeah. So you know, there's great demand for this stuff. I think Bitcoin benefits significantly as a result, because it's one of the few places that you can actually go with the money where you're not going to get screwed. You know, stocks and real estate being the other two. So I expect it to, you know, maybe like quadruple or quintuple, something like that by then. So, you know, maybe 60 million Americans having Bitcoin in 5 years, I think is perfectly reasonable. You know, you have to also remember that there's a significant number of people that just don't even have bank accounts and don't have any disposable income. So, you know, maybe it would be great if they could start saving in Bitcoin, but they might not have the means or the jobs to be able to do so. So, yeah, we'll see.
Yeah, that's it. That sounds about right. So what's your perspective on, so speaking back to sort of the authoritarianism that Bitcoin sort of allows an escape from to a certain extent? What's your perspective on, so why is fiat money immoral, and what is moral about Bitcoin? What are the values that Bitcoin protects and stands for, and why is it, civilization building currency as you described it.
Yeah, so fiat money is immoral because it allows for that. There's a huge moral hazard at the center of every central bank, which is the ability to create money out of thin air for the purposes of whatever the government wants. But it's not just at the central bank, it's at every other bank in layers below. This includes commercial banks and retail banks. Commercial banks lend to businesses in the form of buying up their corporate bonds. It goes down all the way to retail, where from everything from credit cards to mortgages, which is all money essentially created out of thin air. And the thing is, every time you create a loan, basically, and this is how it's always on the books, is the money is printed as a loan. So for example, in the federal government, when you have a budget of 6 trillion and you have revenue of 4 trillion, the 2 trillion difference is sold as treasuries. Whatever the public and other central banks don't buy is bought by the lender of last resort. That is the central bank, and they will buy, say there's 1.5 trillion left, they'll buy the 1.5 trillion in
It's a Tuesday for them these days.
Yeah, 1.5 trillion, and that's money that came out of nothing, right? A similar thing with corporate bonds. It's fractionally reserve bought essentially. So they might only have 100 million in deposits, but there's no real reserve requirement, so they can buy $2 trillion worth of corporate bonds if they wanted to. That's how it happens. Same for your mortgage, same for your credit card. It's all money created out of nothing. It isn't from somebody's savings. So what you end up getting is a lot of expansion of money. And it's obviously good for the person that's getting the loan. It's also good for the bank because they're getting interest. So economics is the science of figuring out what the unseen effects are. What's the unseen effect? Well, you're expanding the money supply. Every time you expand the money supply, that dilutes everyone else's purchasing power, or you are diluting their savings. And anyone that is holding the dollar now has a little less purchasing power. In effect, you're stealing from them by expanding the supply. This would be the same thing if you had shares in a company and somebody just sort of stealthily issued more shares of it, in which case you'd be diluted because you don't get a share of the company as much as you thought. So that's a form of theft, essentially, and it hurts not just holders in the United States. Some of the biggest holders are central banks of other countries, and not just central banks of other countries, but people in the poorest places in the world. The first currency that people tend to flock to when their own currency is hyperinflating is the dollar. So in places like Venezuela, Zimbabwe, even North Korea, the US dollar reigns supreme. So you are stealing from those people, which is kind of crazy, but that's true. You're stealing from people in the poorest places in the world. So fiat allows for this huge moral hazard of being able to steal from the collective for a personal or a very small group's benefit. And this has happened over and over and over again and continues to happen. So this is why I call fiat money a cesspool of corruption, cronyism, and theft. It really is very immoral. Now, Bitcoin doesn't have a central bank. And in fact, all of those people, all of the new Bitcoin that's created is done by miners, and it is an open process. You don't need anyone's permission to go do it. Whereas you do need permission by the central banks or some bank or whatever in order to expand the monetary supply. So that it makes the process a lot more fair and a lot more competitive. So in that sense, Bitcoin is way better than all of these other fiat currencies because it is, it doesn't have a moral hazard. It doesn't have a center. So that means that it allows for all sorts of better things. So, when a government is in control of a currency, they can do things like, censor or confiscate, censor your transactions or even confiscate your money, which many of them have done, right? Like if you're accused of being a drug dealer or a child pornographer or something like that, they'll just take your money.
Or the civil forfeiture laws even, which many states,
Yeah, like where the $100,000 is the defendant or something like that. Which is
they just take your $100,000 car because they allege that there was a packet of cocaine in the background or something. Yeah.
And just all sorts of ways in which property sort of is taken over like in an unjust manner. Bitcoin kind of prevents that, at least for money. And if you are your own bank, it's better than even something like physical gold, which can be seized away from you because it has a physical location. With Bitcoin, because it doesn't have a physical location, it can reside in your mind. It can reside on a piece of paper. It could be backed up on, hard drives in 7 different locations, and require 4 of their signatures, something like that. It really makes it a lot easier to secure and a lot harder to seize or confiscate or whatever, which gives it like sort of like the super property, right? And I think that's closer to what is actually more moral, because if you make something very difficult to steal, then people are just not going to be able to steal as much, and making it a much more moral money. So I would say that that's the main argument in the book, is really fiat is immoral because it is very easy to steal, and lots of people do it whether they know it or not. And Bitcoin is very hard to steal, and therefore it is a much better money and a more moral money. That's it.
And with respect to, you make an argument as well with the notion of high time preference, and how basically fiat encourages that sort of behavior, and Bitcoin allows you to lower time preference because you can ensure that your money isn't being devalued based on the fact that it's a known supply. What do you think the societal effects are? So that's an individual effect, but what do you think the societal benefits are, the sort of second order effects from having a multitude of people in the society have their money in Bitcoin? What does that sort of allow them to do? I remember when you had a discussion with Saifuddin, you guys were sort of talking about something I always mention, which is the, for example, with airplanes, like, and so much of the infrastructure technology has not changed in like 50 years, right? So all the information technology where government was kind of unable to impose itself in regulations because it's going so fast, that was able to sort of advance and evolve rapidly before they can intervene in it. Airplanes are actually slower than when my dad was a kid, which is insane. And there are many aspects of our, if you go back to the 1960s films, their imagination, their vision of what the 2000s would look like is so different than what's actually the case. And obviously you can add in, our step back from our space exploration activities, which is now starting to come on board a bit more because of people like Elon Musk. What do you see sort of like the second order effects of being able to have a hard money like Bitcoin, where you can, which is low time preference, which is stable, which is a defined supply?
Yeah, before I answer that question, think about like fiat money, right? Like, and essentially it's being stolen from you like all day long. And what does that do to your mentality? If it's being stolen from you, well, you might as well spend it before it can be stolen, right? That becomes sort of that attitude. And this is essentially what high time preference behavior is. It's going to get stolen from you anyway. Might as well like make good use of it before that happens. And this happens in like a lot of societies where things are unstable, or if there's a lot of theft or crime or something like that, you have a lot more people that are going to be more high time preference because they feel kind of helpless against all of the things that are happening against them. And that's kind of happening at a different level all throughout the world, right? Like their savings is sort of like debased away from you through monetary inflation and so on. So it makes it very difficult to plan or look far ahead. What Bitcoin does is, because it is impossible to steal if you're securing it properly and stuff, or very difficult to steal, it gives you certainty over the long term. And that certainty is what allows for low time preference behavior. If you have more certainty about, okay, well, I have, 1 Bitcoin now, well, that's still going to be 1 Bitcoin 5 years from now, unless I spend some of it. And, the 1 Bitcoin 5 years from now is probably going to be worth a lot more. So, it's going to be better for me to try to figure out a way to keep that 1 Bitcoin and survive up until then, so I can enjoy myself then, right? Like that sort of like thinking of ahead is induced by Bitcoin because of its lack of ability to be stolen from, and this very strong property right that you have over it, such that even the government has a difficult time taking it away from you. So As a result of that, you get civilization building. When you have certainty over the long term, you tend to think about, okay, well, how am I going to live for a while? What am I going to build out? And this is something that I encounter with Bitcoiners all the time. Many of them are thinking about having families, and like, okay, well, what am I going to do, and to make sure that their futures are secure and so on. Which makes sense, because if you are thinking of the future, I mean, this one of the responsibilities that you are going to have as a parent is making sure that your kids are grown, without too much, in the way of bad experiences and so on. So, doing that causes this low time preference behavior. And oftentimes that means building stuff and creating things, and capital formation, and, investing in capital goods, and instead of like direct consumer goods and things like that, which literally builds up civilization, right? Like the more capital goods you have, the more efficient everyone's labor is going to be, and you get abundance that way. In which case, you can build more stuff and have a more thriving society. But if things are kind of being stolen away from you, like we have in the fiat economy, the incentive is the exact opposite. You want to spend now, you want to consume now. You care less about the future, and you're going to kind of eat your own seed grain, or whatever the analogy is, and you end up screwing yourself over, and you start taking apart even the things that have already been built, because, well, it's gonna be taken away from you anyway by some way or means, so might as well just spend it and get what I can for it right now. And that's literally decivilizing, right? It's making things less efficient, and you get planes that are like worse, objectively speaking, because you're tearing down the apparatus of capital goods and labor efficiency and things like that. And like, if you think about it, like research and development is a form of capital good that isn't really being invested, especially in places like the airline industry, which are essentially a bunch of zombie companies that have no business like running, but the government keeps subsidizing them so they can just keep working, even though they're not at all efficient or innovating in any way. Like, you get stuff like that, and it's a slow and inevitable decline until like there's sort of like a much more sudden decline that would be forecast for a pure fiat economy. Thankfully, there's Bitcoin, and there is sort of like a turn towards a more low time preference, society that's at least happening among Bitcoiners. I imagine that it'll spread more to others as they get into Bitcoin, because Bitcoin is just superior money.
So what you're saying is it's better to have a society that values investments into the future to basically produce better humans and better technologies and innovation, which require a lot of capital formation, rather than having a society that has its money stolen and spends it on cheap Chinese goods, basically.
Yeah. The thing about theft is it makes everything unstable, and it makes it very difficult to plan, because at any time the government can come in and say, we're going to tax you for this that you didn't expect, and that level of uncertainty makes it very difficult to plan ahead or to build something, even if you have an inclination to do so. So there's probably a ton of people in the economy right now that would love to, like, they have some talent, good skills, whatever, or ideas for new products that they can build out that would be better than what's out in the market today. But they can't go and try that stuff, largely because they think it's too risky, right? Like the risk of yourself going bankrupt, or you're going to probably need to take out loans in order to fund that and stuff. It makes it a lot harder. Under Bitcoin, what you can do if you have those dreams is to just save up in Bitcoin. And now, like 5 years later, you have plenty of money to go and try whatever it is that you want to try. And because it's your money, you're going to spend it a lot more efficiently, instead of like sort of the current model, which is get VC funding and spend like a drunken sailor and pretend that your company is worth more because it happens to be popular, something like that. It's instead of being unmoored from reality, you're getting closer to reality, which I think ultimately is better for everybody, because it's actually based on fundamentals and not on, you know, sort of insane money printing and these fantasies that we have that it's worth X, when really it's just you know, a lot of people putting money in because it has nowhere else to go.
I think what you say is really important too, and it also speaks to one of the most pernicious consequences of all this is the fact that family development, starting a family, is being delayed, is not happening at all in a lot of cases, is because people my age, people in their 20s and 30s, who are already basically racked by student loan debt, which is a consequence as well of this fiat economy. And then on top of that, you have actual inflation, if we measure it by the pre-1980 standard, is something like 10 to 12%. It's probably even higher than that by this point, with a 30% increase in the money supply as well. So you're losing 10, 12%. How many people are getting 10, 12% raises every year? Not too many. That's right. I mean, maybe you go a couple percent if you're lucky. So you're sort of in this continual rat race. So you don't feel secure enough to be able to start a family. You have all this bad debt piling up. Your job isn't keeping up with the pace of the real inflation, which is being you know, was obscured by the CPI data, because again, 1979, we're looking at double-digit inflation if you measure by then. So having a currency is not, that is actually hard. I made a joke in my last podcast about Bitcoin, about how Bitcoin is the hardest money ever made, short of sleeping with Harvey Weinstein or working at an Amazon warehouse. So having a hard money that isn't subject to depreciation by people in the Federal Reserve or the government destroying its value allows you to sort of take risks, allows you to go start that business, allows you to plan for the future, allows you to even have a family. And one of the biggest crises that we're going to have as a society, I think, is going to be our Japan's already seeing it, Italy's seeing it, Spain's seeing it, sort of topsy-turvy, upside-down pyramid, where you have a lot of old people, you don't have that much young people, and the young people themselves aren't having kids, and who's going to pay for the old people, especially with a depreciating currency, right? So that's the sort of message that I know that you like to advance as well. And I, particularly with people in my age group, sort of understand things in this way, because as you said, people feel like they're being stolen, but I think it's even more than that, because they instinctively know they're being stolen, right? Like I never really thought of me being stolen from, but we all sort of see, well, okay, but tuition is going up like, you know, double-digit percent on this year, and the housing, I can't afford a house. My parents, you know, were, you know, people say my parents were able to afford a house when they were in their 20s, and I can't even afford a house in my 40s now in the same area. So they instinctively know something's wrong, but they can't exactly put a thought to it, put a word to it as you do, and you demonstrate that, well, you are being stolen from, and this is how it exactly works, which I like. I want to ask you about, go ahead.
Well, so you are being stolen from. You're being stolen from so much that you're going negative, right? Like, which is debt, right? It's not just that your stuff that you already currently own is stolen from. Your future is being stolen from through that. And that's an even more pernicious thing. And this is something more that I think that you were talking about, which is, you know, you're being stolen from, but not just your current self, your future self is also being stolen from. And, you know, this is the pernicious thing about debt, and especially government debt. It's not just our grandchildren that are being stolen, it's your future self, right? You have to pay the piper. And if you're going to live another 20 years, you know, that you're being stolen from too. And that level of theft is just so pernicious and so like destabilizing. And it puts you in a state of essentially slavery because you have this debt that you have to service the whole time. And, you know, most people just like, because they can't save and they're continually being stolen from, you get into this enormous amounts of debt. And, you know, next thing you know, like half your life is over and you have like zero to show for it. It's all consumed on the front end without anything like to back it up, basically.
Right. And I think as well, what plays into that as well is why people sometimes fail to make the connection. I think most people still do, particularly, like I said, the millennials, although hopefully they're going to start to get it, is like, for example, your Spotify membership is like $10 a month. It's like, oh, I could get all this music for free. So there are certain things that are like incredibly deflationary. Your TV is cheaper, and you know, you can get every book on Amazon for like, you know, fraction the price of what they used to be. So you don't actually draw the connection, because the sort of simple things, the entertainment things, like sort of convenient things, seem to be cheaper, but all the things everybody wants, like the house, the healthcare, the education, the there's certain cars, like that stuff is all going up, and you can't quite understand how is that happening? Because now I can get every, this CD collection I have on my Spotify, this playlist would have cost me like $1,000, a few years ago. And now I get it for $10 a month. So I think it's really important to draw that connection.
Yeah. So I mean, this is what we would call like bread and circuses, right? Like, and this is what the Romans did, where they would mollify this populace that was obviously like a large amount of them were like Roman slaves, so they were always like concerned about revolt or whatever. But it was okay, let's make sure that they are entertained, so we're going to give them bread, make sure that there's like a food program and some sort of entertainment. And that seems to be the case today. I don't know if Spotify is profitable, right? Like, and a lot, if they're not profitable, well, where are they getting the money? Well, they're getting it from investors. Well, who are the investors? Well, it's usually like VCs. That's all newly printed money. So in a sense, we're getting bread and circuses, but through sort of the market, and there's tons of food stamp.
We're not getting bread and circus. We're getting weed and Netflix. That's the
and it's a lot cheaper for the people in power, because if it's digital, you can just sort of infinitely copy it, right? Like it's really only bandwidth cost, which honestly gets cheaper every year, which is why you're able to get 1099 for a Spotify membership, and you can listen to all the music you want, because it's only like a megabyte per minute. And even if you're listening for 24 hours a day, it's actually not that much. And you're they can actually afford to send it to you. So yeah, all that is really just sort of like a way for the government to keep you sort of blind to the fact that everything else is kind of getting worse. And this is what the Romans did during times like bread and circuses was much more a thing during the debasement of the denarius, more so than like earlier times of Rome when they had harder money. So that's basically what's happening, and that's why like people aren't necessarily waking up, because in a sense their immediate needs are sort of like satisfied, and they're entertained and distracted from all of the stuff that really they would learn about if things were, I guess, a little more painful. But this is how you anesthetize a large part of the populace.
Absolutely. And it's not only that, it's also I think on the corporate front as well. You see like Raytheon putting up the gay pride flag on during gay pride. It's like they make missiles that can kill people. And it's like it's like, and Amazon will put up like the BLM banner on their website, and meanwhile they have all sorts of African Americans and Hispanic employees working at their warehouses who complain of horrible conditions of their work and not being able to use the bathroom and all sorts of things. So what do? They distract and say, no, look, we're the good guys. And meanwhile, they can get away with their practices as well. And those are the same people, I think, as well. I think this is where the libertarians and conservatives sometimes miss the connection in this respect, is that Bitcoin is not only powerful because of its ability to counteract government oppression, government takeover of liberties and diminishing of liberties with respect to the people, but as well as the corporations today can basically block you out. It first started with things like Twitter and Facebook, where they cancel your speech or deplatform you for things you say. But now it's getting even more dangerous and scary, because I don't know if you saw the whole PayPal Anti-Defamation League thing, where they're saying, okay, well, if we deem you to be a extremist or say things that we deem is unfit for the public to hear, well, then you can't take PayPal. And Visa and MasterCard did this with Pornhub, and apparently OnlyFans the other day had were basically pressured into we're pressured into getting rid of explicit content because of big banks, stuff like that. So whatever you think about those companies, it's clear it's not going to stop there. It starts off with people. It starts off with sort of things that we can kind of agree with, and then it goes on to, oh, well, we don't like what you're saying. We don't like what you represent as a company. So you can't transact with Visa or MasterCard or PayPal or Stripe or any of these things, and then you're locked out of the modern financial ecosystem as well.
This is a slippery slope of authoritarianism. You almost always start with something that seems reasonable, and then they just take a little bit more power each time, and it gets less and less reasonable, to the point where we're locked out of our own neighborhoods and we're forced to stay indoors or whatever. This is how liberty dies. It's with a whimper, not with a bang. So Like what can we like? How does Bitcoin fix that? I think is kind of your question. Basically, Bitcoin, it has an ethic of verify, don't trust. So, centralized services are essentially all trust magnets. So if you're on Twitter, you're trusting them with all of your data and all your tweets and things like that, and they can put out whichever things that they want because they are the central controller. And this is the same with Google, Facebook, or like you were saying with PayPal, Visa, and everything else. The ethic of Bitcoin, I think, is much more towards verification, not trusting, towards decentralization, and that's going to mean that people are hosting their own stuff. So it's one thing to put your stuff on Facebook, right? Like some weird message that Facebook doesn't like, and in a sense, the property boundaries there are very fuzzy. So it's not at all clear what is yours and what is theirs, because they clearly own the databases and the servers that have all of the data, but you're the one that created it. So who owns what, right? Like, and who, there's no clear boundary. But if you're running your own server and you're pushing it out to people that want it, then there's no problem. There's no central party. There's no sort of single point of failure or a choke point at which things can kind of go awry. Nick Szabo says that trusted third parties are security holes, and they definitely are, because they have the ability to control things. And we are getting things controlled, because of these giant walled gardens where all of the servers are run by the same company and things. But one of the optimistic things about Bitcoin is that we're moving kind of away from that model, and the Lightning Network is an excellent example. Everyone runs your own. You run your own Lightning node.
Can you explain the Lightning Network, because I'm still a bit confused about myself? So it's how far along in the process is something that's completed? Is there something we're in the middle of, and how does that change Bitcoin?
Yeah, so the Lightning Network is already up and functioning, and you can pay people with it and everything. If you think of Bitcoin as this ledger, and every single transaction that's ever been on Bitcoin is in this ledger that we call the blockchain. That's what you can settle Bitcoin transactions on chain, right? Like I can pay you, and then there's an entry there, and that represents my paying you. What you can do though, if you're doing a lot of business, is this happens in like all sorts of other financial markets all the time. If you and I are doing like 100 transactions a day, you don't want to put 100 ledger entries in there, because one, it's going to cost a lot, and two, it's just very inefficient. So what we could do is just figure out the balance at the end of the day, and then settle once a day. Okay, so that provides one transaction, and this is a very common thing. It's called technical netting, and that's sort of the term for it. But that's a perfectly fine way to do it, and that's essentially what the Lightning Network is built on. And it's what we would call sort of a payment channel. So instead of me paying you on chain, I would pay you through this payment channel, and then we'd settle this payment channel every once in a while, and it would only go into the chain. So there would only be one entry on the chain, and that one entry would represent maybe like 1,000 transactions between us or something like that. Now, if I have a channel with you and you have a channel with Bob, I could pay Bob through you, because I can pay you $5 and you can pay Bob 5 Bitcoin or whatever, right? Like some amount. And that would mean that I pay Bob. And that in turn means that you can have another person on the end of it, and I could pay whoever Bob is connected to, and whoever is connected to that person, and you suddenly have a network of channels, and that's what we call the Lightning Network. So anybody that's connected with sufficient capacity, I can essentially pay more or less instantly. And I skipped over the technical details, but it's done in a way that is trustless. So if you try to screw me over on a payment channel and not pay me as much as I'm due, then I get to take all your money. Like there are certain rules like that can get executed, and there are sort of like justice or punishment transactions that are available if one party to a channel like closes it early or tries to do something nefarious, which is wonderful, because now if you have a trustless payment network, now you can send back and forth and so on. So in order to do that, every single node or like anyone that has payment channels open has to be running a full node and watching the blockchain to see if anyone is cheating them out of their money and so on. And that's essentially how it works. Is you're not just a consumer. You're sort of serving up data to all sorts of other people as well. And that's the model of decentralization that I was talking about. Is instead of all of the data being in one place, essentially one server and everyone else is a client, you have a different model where everyone's running their own servers, and then there's no third party involved that holds all of the data for you. Instead, you hold your own data, and you can make it so that, okay, these people are subscribed to my feed, and it could be a bunch of tweets or whatever. And there's no one censoring it because it's direct peer-to-peer communication. And this was actually what the internet was designed to be from the very beginning. It's unfortunately gotten away from that as we've grown addicted to walled gardens, and even most of the consumer internet is built around this paradigm that you're going to be mostly a client and not serve up stuff. So typically your download speed is way higher than your upload speed for that reason, because you're not serving up data. Uploading is serving up data to other people. So that I think is sort of the model that we're experimenting with in Lightning. And you have apps like Sphinx Chat and this podcasting stuff where you host your own podcast in a particular place, and you could charge money for people to listen to it, right? Like for each minute of listening, you pay like 100 sats or something. And that's a very simple way in which you don't have to have any other person sort of involved. And you can imagine you can do something similar with YouTube videos, tweets, blog posts, even merchandise or something like that. In which case, there's no risk of censorship because it's all peer-to-peer. And you can have mirrors, and you can have other nodes that are serving up content as as well for money and things like that. And because you have this native money layer, you don't have to have very invasive stuff like advertising come in. Because you can just pay for it directly. All of us are paying for the content that we are reading and watching. It's just in the form of ads. And it's very annoying. And I think it's kind of a very inefficient and dishonest way to go about business. I think you should just straight up pay for it. And that way it's a market transaction. And as someone from North Korea told me, there's something sacred about market transactions where both people are getting something in equal exchange, because now you kind of have a contract, right? You have obligations to the other person. But if it's given away for free, then you really don't have a right to complain when it's taken away from you. And that's unfortunately the thing that's been the model of the internet in many different countries, actually, where in exchange for them giving you something for free, what you pay with is not with money, but with your compliance. And when you comply, they can demand greater and greater compliance to the point where you get a totalitarian state like you do in North Korea. And that's exactly where you don't want to end up. Market transactions where you're actually paying for stuff should be the norm. And there's something beautiful about it that makes it a lot more fair and just, rather than free stuff where it's an unequal exchange and you're giving up stuff that has long-term consequences that you don't really understand or know about.
I see. And what's your response, speaking of technological aspects of Bitcoin, what's your response to the ETH people who say, ETH is the money that people will coalesce around because it has the smart contracts, it has all these applications and NFTs and all sorts of other currencies based on its base layer, and therefore ETH is really the best money. What's your response to that opinion?
Well, it's obvious that Ethereum marketing is going overboard and trying to deceive the public. First of all, smart contracts are in Bitcoin, and it's been there from the beginning. This idea that smart contracts are an innovation of Ethereum or some invention of Ethereum is complete and utter bunk. And anyone that thinks so is an idiot. What they have are Turing complete smart contracts, which are completely insecure and result in all sorts of hacks, all sorts of vulnerabilities, because it is not analyzable from a technical perspective. It is extremely difficult to audit. And this is why the Ethereum ecosystem is so complicated, because of the Turing completeness. Not only that, but a lot of these projects, quote unquote, that are on Ethereum are straight up scams. And you are more vulnerable to those if you are doing being on that platform. There've been so many rug pulls and hacks and things of that nature because the people that are programming on there are just straight up incompetent. They are making backdoors to stuff and like exit scamming and doing all sorts of things, which are incredibly easy on Ethereum, whereas they are relatively hard on Bitcoin. So yeah, I don't think there's any legitimacy to that. And the biggest reason not to go to Ethereum is because it is completely and utterly centralized. There was a quote unquote smart contract hack maybe like a week and a half ago on the Poly network, and it was across multiple chains, including Binance chain and Ethereum. But the main thing that was interesting is that nominally the quote unquote hacker got $600 million worth of crypto, right? Mm-hmm. And basically the Poly network found out about it, and they called all the exchanges and said, stop trading from this address. They called up all the miners, do not mine any transactions from this address. Basically censored transactions from a particular address. Now, as we were talking about before, it always starts with something reasonable, right? Like, any sort of authoritarian tendency. Oh, that doesn't sound bad. Let's allow that. Well, they just did it for that. Guess what? They can also do it for all sorts of other things. Mm-hmm. And the quote unquote hacker ended up settling for a $500,000 equivalent bug bounty. So in a sense, he got less than 0.1% of the entire value of it. Or another way to think about it is 99.9% of the value is controlled by the central controller. So if they don't want you to have this money, then they will make it hell for you to do so, and it's going to cost you 99.9%. So in a sense, like if you're keeping money in Ethereum, you're kind of playing with fire, because at any time they can just pull the rug out from under you, and likely 99.9% of your wealth that's in there can be pulled at any moment.
Can you explain that a little bit more? So what could, like, in your if you were to envision sort of a worst case scenario of, let's say there were mm-hmm. they wanted to do something bad, like what could Ethereum do to you're someone you have your Ethereum on Coinbase, maybe you have it on your Coinbase wallet. What could they do to diminish your Ethereum holdings or destroy it?
Yeah. So suppose that there's some heavy regulation coming, something like mm-hmm. that, right? Like, and this is not that far away, by the way. Gary Gensler of the SEC, he wants to regulate a lot of these coins. So he may very well say, okay, every Ethereum transaction needs to be AML KYC, something like that. And Coinbase mm-hmm. maybe goes, you know what, we can't handle all that paperwork. Right. We're done. And then Ethereum Foundation says, you know what, like for every, the United States is obviously not friendly towards us. So we're no longer going to service any transactions from the United States because we'd be breaking some laws and they might throw us in prison, something like that. Mm-hmm. In which case, okay, like all those coins are stuck. Like it's literally like you. I mean, that's a far out scenario, admittedly, but in principle, they can sort of change the ledger at any time also, right? Mm-hmm. Like they can just be like, hey, and they have done this 2016 with the DAO. Basically reset the ledger to whatever they want, because they hard fork all the time, and a hard fork is a backwards incompatible upgrade, and if it's mm-hmm. backwards incompatible, all rules are gone, right? Like mm-hmm. Everything is up in the air and anything is possible. So you could, for example, if they wanted to, hard fork to where every person from a certain IP range, like you're like we're going to delete your balance or something like that, mm-hmm. or if there's evidence that you did something that was against the laws of the United States or whatever. And, I mean, that's just one particular scenario, but there's many others that probably people haven't even thought of, mm-hmm. in which it's vulnerable, because that's the nature of centralized things. There are 100 different ways in which a central trusted third party can get compromised. Right. But, in a decentralized network, there's no sort of systemic risk like that. Any individual has probably similar risks, but they have to target you specifically. It's not a systemic risk like it is with Ethereum or any of these other altcoins.
I see. So in a sense, to make it into sort of practical terms, Bitcoin is almost governed by a constitution, whereas these other coins are basically sort of they could be ruled on by a whim. They could change the rules.
Yeah. So Bitcoin is governed by software.
Right.
Straight up software.
Right.
It's better than a constitution because we know exactly what everything means.
Mhm.
But with Ethereum, Cardano, Ripple, whatever, they're ruled by people, and people are whimsical and capricious and arbitrary and sometimes even malicious or incompetent. In which case, all your funds are at risk, and that's the problem.
Are there anything outside of Bitcoin that you have interest in or would ever invest your time or money in, or do you just not like the rest of the space, or how do you go about doing that?
I think the rest of the space is scammy, and I really think they are no better than fiat money in the sense that you have a central controller and they do things that I think are very immoral. So Ethereum had a giant pre-mine, right? Like they printed tokens for themselves, and most of these tokens have that. Like Ripple printed an enormous amount of tokens for themselves, and that's just straight up stealing. And they make very deceitful claims like, hey, like, and they promote things that are straight up scams, like straight up Ponzi schemes even. I think they're vehicles for speculative frenzies, like sort of for inflaming greed in people and things like that. So I think they are really evil. And I don't think anyone should, or any Christian anyway, should invest in any of that stuff, because you're just sort of like perpetuating this very bad system of like sort of evil. I think so. There's a lot of that. And even outside of the crypto space, I think like investing has gone to a really weird space where it's more a Keynesian beauty contest than anything fundamental. So in a sense, like I don't see much that's worth investing in other than Bitcoin.
Makes sense. Yeah, I see what you're saying. I mean, it's almost like the whole point of crypto was to not have to trust people. And you're saying, well, if you invest in any of these other ones, you're going back to square one in a sense, because you're trusting people not to screw you.
That's right.
One last thing I want to ask you is, so where Bitcoin seems to be coming back up, so we've got some upward motivation in its price action. Do you think, from what you've been reading, the data you've been reading, the metrics, do you think we're headed for another sort of parabolic rise before the year ends, somewhat similar to what we had in previous cycles? If so, what are sort of the numbers that you're looking at?
Yeah, I mean, the only sort of like technical analysis of Bitcoin's price that's ever made any sense to me is the stock to flow model, and that's held so far, and it's within a fairly decent range. I think Plan B predicted like 3 years ago that Bitcoin would reach 55,000, and I had him on my podcast, and he was like, "Yeah, I regretted making that prediction because I wanted it to be higher." He later came out with the S2FX model, which predicted like a 288,000 Bitcoin. I think both numbers are definitely achievable. It really depends on how heated the space gets and what the frenzy is like towards the end. And typically the top lasts for like 20 minutes, right? Like
right.
Like the last top was like 19,000, and it really didn't last very long. And it was maybe like a day when it stayed there.
Right.
And like the spike up to like 19.5 was like really not that long. So I expect some sort of price action that's very similar to that, where there is a frenzy, and then it looks overheated and it goes a little further than you think, and then it tops, and then just when people think it's like a permanent thing, then it starts to go down, and then you bottom. So I think 100 to 300 is like that. Those seem like reasonable numbers to me, but who knows? But yeah, I do expect some sort of correction towards the S2F model, which has held so far. That doesn't mean it proves anything, but from a logical a priori, first principles perspective, this makes the most sense to me.
I agree with that. It seems to be have a remarkable track record so far, which is cool. Well, anyway, Jimmy, thanks so much for being on. Where can people find you?
Twitter at Jimmy Song. I have a newsletter, jimmysong.substack.com. You can read it every Monday. I put out sort of a newsletter about like the technical stuff. There's usually an article I write and some economic stuff as well. So yeah, and you can follow all that I'm doing in my newsletter along with like links for my books and things like that. So yeah, there you go.
Well, I had an amazing time. Really fascinating conversation. So thanks again. Appreciate it.
Thank you.
If you enjoyed our show, please click subscribe to stay up to date with our YouTube channel and podcast, and give us a 5-star rating on Apple Podcasts so that we can keep delivering guys some great content. Thanks again, and we will be back next week.
Aw, man.
And probably 6 robots.
We stand for a free and open debate and exchange of ideas.
And if you disagree with anything we talk about, you are a racist and no better than Hitler.
What?
Let's get started.